Welcome back to the March Housing Update. Today, my guest is Gerri Swanson from Union Home Mortgage. Hello, Gerri.
Good morning. Good to see you.
Good to see you. We're going to jump right into it, Gerri, because we got a lot to cover today. And I'm going to read this slide because it's interesting right now. The news is meant to terrify and not clarify.
Absolutely.
And therefore, the first responsibility of a leader is to define reality. And I think it applies to this market that we're in because we need to really clarify and understand what reality is. I love this slide because it breaks down interest rates here on the left by buyer demand. And Gerri, what have you seen? Because most recently the interest rates are up and now they're kind of coming back. Are you seeing less buyer demand when they go up?
Yes, I'll have to say, unfortunately, that does affect us that way, but it's, the natural progression. So people see the higher interest rates, so the buyer demand, they slow down, they hold back, and then as it goes down a little bit, obviously they come back into the market. So because it's been fluctuating up and down so much lately, it's kind of been a push and pull with buyers. So
I love that, a push and pull. So go ahead and read here what Sam Cattler said, who's at Freddie Mac.
He said, the economy is showing signs of resilience, many due to consumer spending, and rates are increasing. Overall housing costs are also increasing and therefore impacting inflation, which continues to persist.
The bigger question to this all, because we've been dealing with these interest rates and we've been dealing with a lot of things, but what we're still challenged with, Gerri, is inventory. And if you look and see where the total U.S. listing count is from January of 17 to January of 23, we are trending down. So if there's less houses to sell, what does that do in simple economics?
Prices go up.
Prices go up.
We've seen that a lot in the last few years.
Yes, we have in the last few years. And if you look at the U.S. total listing count as it relates to March of 20, even look at that because March of 20 was when the pandemic started.
Right.
And so you can see that we've just been trending down and it's cyclical. In our market, it may not be the same cyclical as this because we have higher inventory in January, February, March, and we go down in the summer. So we're a reverse of this. But I found it kind of interesting because you'll see later, Gerri, when I pulled the numbers for our market, what that looks like. Now, go ahead and read at the top of this what this says.
While the number of homes for sale is increasing, it is still 47.4% lower than it was before the pandemic in 2017 to 2019.
That's crazy.
That is a huge difference.
Right? And so if you're looking at before pre-pandemic 1,000,001 homes. Now this is nationwide.
Right.
And you're looking in 2023 at 577,000. Dramatic. Now, if you look at this nationwide, and I found this kind of interesting because the chart is showing everybody's in 0 to 15% less, yet it was 47%.
Yeah.
But this is month over month. So February of 2022 over February of 2023, we still have less, 0 to 15% less. Nationwide, less than 6.1%.
Wow.
This also then starts to look at new single family home, properties that are being built. And what I love about this, because, 2005, 6, 7, build, everybody getting money. And then 8, everything dropped off. And look at what happened to new starts.
Wow.
Right? 14 straight years of below a 52-year average, which I think is rather interesting. And when you look at it compared, to average annual units completed, here we are today in 2023, and we go back, it's still less than what it was in 2007, 8. So, I love this particular slide, Gerri, with the housing market short millions of homes, and Realtor.com, Bank of America, everybody's talking about it. Anywhere from as low as 1.6 million to as high as 5.2 million. Are you seeing that? What are you hearing on your side of the fence? We're not in multiple offers right now, so that's hooray.
Yeah.
But are the people that you're talking to, are they struggling to find that home?
They are. So the people that have decided to wait because the interest rates have risen, they're still waiting. But the ones that were in that time frame and they couldn't get their offers accepted, because multiple offer situations, now they're back in, even with the rates high, it's still better because they can at least get a house and, refinance in a few years. Now their problem is not finding a property. They're just not available and very far and few between. So making offers is, significantly less, than it was before. These same buyers would be making, 2 to 3 offers a week. And now it may be, 2 to 3 in 2 months. It's just not there.
Inventory's just not there.
And even they're making concessions and lowering their criteria just to get something, and the inventory still isn't even there. So
right. But if you're getting a house for $50,000 or whatever, average house, because you were $50,000 above list and now you're getting some negotiating, that interest rate really doesn't affect you because you're getting the house for so much less.
Absolutely.
So affordability is there, correct?
And you're no longer renting.
Yeah.
So there's nothing more expensive than rent.
We're going to talk about that in a minute. Great setup for that. So how much of price has fallen from the peak? Well, look, this is nationwide. I submit we have not really seen a fall of prices because we were seeing people go way aspirational, and now the prices are really adjusting. In many of the homes that have listed, they went super high. So it feels like the prices are falling, but they're just getting in line with what I originally suggested.
Right.
But it's anywhere from 2.7 to 1% based on these 3 analysts and what they're saying. So the big question right now, Gerri, is should I buy a home right now? And the easy button is yes, or the easy button is no. And you set us up for this when you talked about rent. Give us a little color on this slide.
So, in my opinion, should I buy a home now is always a yes, because real estate will always be one of the best investments. The value is always there. It increases. It may be slower some years. It may be faster as it was the last few years. But regardless, if you're paying $100 or $200 more a month because the interest rate is, a full % higher than it would have been last year, that would be $2,400 a year that you're paying extra with the higher rate versus $24,000 a year in rent. So
if you can find something for $2,000 a month.
Right, exactly.
Because many of our, staff have struggled with that in finding something affordable, and they make a great wage, let's face it, and yet rents have outpaced them in what they can afford.
Absolutely. So if somebody pays $3,000 a month in rent, which is extremely common here,
yes,
that's $36,000 a year literally gone for nothing. You lose all of it. So if somebody has to pay $200 or $300 more a month because the interest rate is higher,
right?
I don't think you need to be a mathematician to see that that's probably the best bet for you.
And all the tax benefits you get.
Absolutely.
To that point. So, here's what the estimated national price performance is that these average of the analysts are saying December as forecasted in Q4 2022. Maybe we're going to take a little bit of a haircut this year, 1.67%, which is nothing compared to the 40 to 80% we grew in the last 2 years.
Right.
But then as you go up this is what they're estimating for the next 3-4 years. And when you put in, again, what you just mentioned, price change in home prices over the last 31 years, look at this, Gerri. I don't know if your eyes are strong enough, but that says 428% in 30 years in Florida.
In 30 years, it is not going to change, dramatically drop in, a year or 2 years or 5 years. It's steadily increased. I mean, major increase in the last few years. So
absolutely.
It's always a solid investment.
Totally.
It's your best bet. So
totally.
That slide right there
kind of says it all, right?
Absolutely.
It does say it all. And then going back to the slide before where it shows, okay, here's the 23 pricing. Say you bought something for $400,000. Hard to find something between $400,000 and $600,000 here in Southwest Florida. But say you got that. Look at what's happening. This is a $54,000 increase. Gerri, I have 2 of my sons that have bought homes in the last few years, and they got in right before the prices went up. What a great way for them to build generational wealth in a great asset that they may then turn as a rental and provide a place for somebody else to live. But, if they want to take their cash out of it and get something else, they've seen great returns on their investment.
Absolutely.
Unbelievable, because they didn't go in with cash. So they went in with, 20% on, roughly $30,000.
Right.
And now this has grown to say another 60, 70,000 on top of that. That's amazing returns.
Easily. Absolutely.
On their investment.
Yeah. I mean, the younger you start, I mean, they're young. I mean, imagine, in their 30s, I know what, kind of wealth that they've built because of that and stability.
Yeah, so, absolutely.
Good for them.
So here's what we're talking about. Housing market in Southwest Florida. I always like to measure what, Keeping Current Matters, which is our analyst that distills all the information does. These are their slides. Homes for sale in Southwest Florida. Right now, where we were in February was 9,314 homes for sale. And that is an increase of 136% over last February.
Yeah,
but look at where it was in March of 2020. That's 16,228.
Wow.
Right? We're on that 47% or, roughly thereabout. So inventory, as you said, just isn't there. You don't want to rent. If you're looking to buy and you're, somebody that's getting their first home, it's a great opportunity. Hey, if you're a second home buyer, you're buying this home for investment purposes. Oh my gosh, why not get your piece of paradise and enjoy it? Because it's not going to go down.
Right.
At least that's what the analysts say.
Well, it hasn't in 30 years, so I don't know that they're mistaken.
Right.
It would be a safe bet. So
it's a safe bet.
Absolutely.
So, Gerri, the last question I always ask is it time to move?
It's always time to move. It's always time to move. It's always time to buy a house.
Yes, it is.
That's it. Honestly, I'm being serious. That is, it's always a great, especially here in Southwest Florida.
Right.
Beautiful area. The homes are beautiful. Life here is beautiful. Come move to Southwest Florida.
She said it best. I'm Mary Bartos of the Bartos Group of Premier Plus Realty. We look forward to seeing you next month on our Housing Update.